17600.
If you're listening to the sound of my voice, that can mean only one thing, and that's that you are in the market pulse, baby. Let's do it. The merge has shipped.
Come on, baby.
Yeah.
Come on now.
That is the date that the Federal Reserve will be making their Fed rate decision.
Well, gee, Tim, I would love to do that. I think we're still going to see projects like Bored Ape Yacht Clubs or things like that still exist. The answer is 1,000 Dogecoin.
Oh. What's up, everybody? Welcome to Coffee and Crypto. I'm going to be your host today, T-Shroom. Tim is out for his C12 meeting. That's a monthly phenomenon, so you get me, T-Shroom. It is Caleb Franzen Wednesday, my dudes, so we are really excited for him to come on a little bit later in the show. But before we get too far into it, we've got some big headlines. Yesterday, the Bank of England made some crazy announcements regarding their bond buying policies and putting a limit on that, and that really sent the markets haywire into closing yesterday of the New York Stock Exchange hours. And then, of course, ApeCoin is being investigated by the SEC, so there's some craziness going on in the NFT space right now. And Joe Biden is just trying his best to absolutely downplay the looming recession. We're going to cover all that and more here in Coffee and Crypto. I'm so glad that you are tuned in and excited that you're going to be able to watch this and learn something. What I want you to do today is share this with one extra person than you normally do. So if that's 0, then that's 1. And if that's something that you already do, then you'll be sharing it with one additional person. The takeaway here is share because you care. You know what I care about? Smay. Smay, how are you doing this morning?
Well, gee, T-Shroom, I'm doing good. And guys, I came ready for Caleb Franzen Wednesday because I decided to look the part. I was telling T-Shroom before the show, I look like if Caleb Franzen swallowed a submarine, but it's still, it's still as close as I could get. I got a nice little hairdo and all that stuff.
That's terrible.
Oh, that's terrible. All right. Anyways, guys, I'm just being silly, but anyways, I'm doing good. Back to you, T-Shroom.
I think Smay actually does look like Caleb Franzen. I'm gonna be confused today talking to the both of you guys. I'm gonna be like, is that Smay talking? Is that Caleb?
Oh, you flatter me.
Yeah, I would just ask Smay, please don't try to use any highfalutin financial or economic jargon, because I'm gonna absolutely not be able to distinguish you from Caleb Franzen. But Smay, before we get too much further, we need to do that ritual that everyone loves, and that is the reading of the green names. Kick it.
I would kick it.
Kick it.
I'll do it, but I don't want to kick it. All right, here we go. Oh my gosh, I just realized how funny that joke was, and that you didn't laugh. That's a tragedy. Anyways, here we go. We got from Mitch Shaw. I said it as if I was reading a super chat. I need to reset here. Mitch Shaw. All right, Agent Gold, a mellow fellow. Who else we got here? Justin Eubanks, GS. I love you guys. We have our blue names like Matt C. and Crypto Sec Guy, and Shannon Sharp, and Elliot Locke. I love all of you guys. We have Crypto Mini Bike. We got GoGo CJC, and let's see who else we got here. We got Mike Lowry. Shout out to you. Shout out to Grand Roofing Incorporated. Shout out to Tristan Williams. Shout out to Crypto Ben Franklin. Shout out to all of you guys. Crypto JMP, Crypto Smitty, Daniel J. Shout out to all of you guys. I love you.
Awesome. Well, love is in the air. That much is clear. Thank you so much for reading those green names, Smay. And as always, we are going to be getting into the market pulse here in just a second. But before we do, we want to talk about who that market pulse is brought to you by, who sponsored it. So, Smay, if you could go ahead and take it away and kick it.
Oh, yeah, I'm going to kick it, guys. I'm going to kick it. So, anyways, I would like to tell you guys about a sponsor that sponsors this channel. It's no secret that doing your taxes is the worst part of the year. Everyone is stressed thinking about it looming. You make your financial decisions dependent on how you think it's going to turn out for your taxes at the end of the year, beginning of next year. Well, let's just cut that out, especially because there's a lot of anxiety around taxes in the crypto space. There's a lot of uncertainty, especially in investments. You don't know the tax liabilities you're going to have. Well, that's why you need to talk to a tax professional who spends all his time reading tax codes so you don't have to. So, guys, that's why we're brought to you by Anthony Price, our crypto knowledgeable CPA, who's going to bring you everything you need to know to settle those pesky cryptocurrency taxes and get you through the year like a breeze, and you don't have to worry about it. There's no stress or anxiety when you go with Anthony Price. So the best thing to do right now, it would be go after the video, go to the link in the description and set up a free 15 to 20 minute consultation with your boy Anthony Price, and maybe he can help you save some money on your taxes. Anyways, back to you to T-Shroom. Oh, habit.
Wow, I cannot believe you just compared me to Tim. No, I'm just kidding.
That should be an honor.
Tim's a great guy. All right. Well, if you're listening to the sound of my voice, that can mean only one thing, and that's that you are in the market pulse, baby. Let's do it. I'm going to start off today with the big print, the big PPI print. This is the US PPI print, and we'll get into exactly what that is in just a second in case you don't know, but that came in hotter than expected, was forecasted at 0.2. The actual was 0.4. What is the PPI? Well, we're going to talk about it more with Caleb Franzen for sure, but basically what that is it measures the prices of final goods sold to retail. So all down the supply chain, there's all kinds of prices from the raw material that most likely grows from the ground or is mined from the ground, all the way until it's that McDonald's hamburger that's handed to you, sold to you, the consumer. What is the price of that hamburger? That is what the PPI measures.
You mine hamburgers from the ground?
Yes, you do. It's called agriculture. Moving on into the fear and greed index, we have extreme fear still. We have dipped down lower, 5 points lower from last month, and we have just gone down, down, down into more extreme fear as folks kind of, we're going to be talking about it big today. That's, the title of our show. CPI is printing tomorrow. So in anticipation for that, fear has grown. But what do? You buy fear, you sell greed, right? Absolutely at a general level. Not all the time and not absolutely. But looking at the Fed CME future predicting rate tool, saying those words are fun. 75 basis points is looking more and more certain, folks. So that is not going to come until November 2nd. Tomorrow is just the CPI print, but that it's very indicative of what is going to influence Jerome Powell and the other voting members there at the Fed. So as you can see, not looking good for 50 basis points. I don't think they're going to do 50 basis, but could they do it in December? We're going to talk about that with Caleb in just a few minutes. Let's say you're new to crypto. Let's say you're new to Federal Reserve monetary policy. It's not something that you hear much about in pop culture. Going to give you a quick history lesson on those rates and what they mean. In 2005, the Federal Reserve started to raise rates for reasons, that were very complicated, but they were coming down from these 20% interest rate hikes that were, very, very influential in the 70s and then all through the 80s. So the story since then has been a gradual decline, gradual being the key word, gradual decline until they finally settled at zero in 2012 after the housing financial crisis, and they came back up a little bit, and now they've come back down to zero, and now they are back up to 3. So could this be a reversal of the interest rate policy of the Federal Reserve to go back up to the 70s? What were they doing in the 70s after all? They were fighting inflation. Could we go back and try to test those highs again of the interest rate? Obviously it's going to take decades to learn if that's what the course of action here is. But hopefully inflation will be quelled long before we get anywhere near even 10% interest rate. And that's even crazy high. I think right now, that according to the Federal Reserve dot plots, which we will talk about definitely more on in November, we shouldn't see a rate hike higher than 4.75 in 2023. So it's supposed to only really go that high up to 4.75. We'll be talking more about that with Caleb Franzen. Let's get into the crypto news here. Joe Biden dismisses recession rumors, expects very slight economic dip. What the heck is this all about? Joe Biden, there he is.
Joe Biden,
our
wake
cyclist in chief. Biden suggested that he believed that there wouldn't be a recession. However, if there is, just out of some crazy possibility that there is a recession, it would be a very slight recession that he expects. So it happened. It hasn't happened yet, he said. It hadn't. I don't think there will be a recession. If it is, it'll be very slight recession. That is, will be moving down slightly. So I don't know. That's, he didn't have a very slight move down when he fell off his bike. Okay, we're done with those jokes. ApeCoin sinks 10% after report of SEC probe into Bored Ape creator Yuga Labs. So this is an interesting story because they're not actually being looked in for any criminal conduct. They're actually just being probed. So the SEC can just decide to come in and do an audit on your project, and that's kind of scary. Let's look into it a little bit more. The SEC is probing Yuga Labs over securities violations via the sale of Bored Ape Yacht Club NFTs and also the distribution of ApeCoin, which launched in March. Yuga Labs has not yet been accused of wrongdoing and may not ultimately be charged as part of the probe. It is well known that policymakers and regulators have sought to learn more about the novel world of Web3. We hope to partner with the rest of the industry and regulators to define and shape the burgeoning ecosystem, Yuga Labs told Bloomberg in a statement. As a leader in the space, Yuga is committed to fully cooperating with any inquiries along the way. So Yuga Labs getting ahead of this story with their tone, showing that they're excited to work with the SEC. Yes, the SEC is going to come audit all of our finances, and they're going to come check out what we've been doing and how we've been marketing our non-fungible tokens. It's so exciting, isn't it? Let's all cheer and be in excitement. Yes. And the market didn't think it was so exciting, though, and they sold off ApeCoin to the tune of 10%.
Yikes.
Moving along, Valkyrie funds to liquidate Bitcoin-related ETF by late October. I have no highlighted comments in this because it's super boring language. Well, I have one. Ultimately, they said this action was taken after thorough consultation with the firm's board of directors and comes after it was determined that discounting the fund was the better course of action for all involved. So discontinuing the fund, excuse me. But with, when one door closes, another opens. And ironically enough, crypto investment production firm 21 Shares launches Bitcoin ETF in the Middle East. So while the U.S. is closing one of its Bitcoin ETFs, futures ETFs, I might add, there's one launched over in the Middle East on the Dubai exchange.
Mr. T-Shroom,
What's
what is
that?
an ETP?
An ETP is an exchange-traded product, and it is much more complicated than that, but it's essentially something that bundles an underlying price movement, and you can just buy that directly on the stock exchange without having to hire a whole floor of traders to trade that actual commodity or bundle of goods or financial services or financial instruments for you.
Mr. T-Shroom, what's the difference between an ETP and an ETF?
An ETP is, I believe it's more commodity based usually, and then an ETF is going to be, they're pretty much the same thing. I think an ETF just incorporates more forex trading, so it's a slightly more taxed advantage. But ETP may have those advantages too. To be honest, I'm not exactly sure.
Thank you, Mr. T-Shroom.
You're welcome, little Dolby in the corner who somehow got a mic. All right, moving along. Microsoft and Meta partnership brings Office 365 apps to the metaverse. So this is a pretty exciting partnership here that's been announced. And what we're going to look at here, just look at this beautiful image of what Teams could be like. Now, if you are an independent contractor or if you don't work with a large team, you probably don't use Teams. But we use Teams here actually at Coffee and Crypto behind the scenes quite a bit. And so this could be really interesting to walk into a world where we actually are having meetings in VR in virtual reality. During Meta's Connect 2022 keynote on October 11th, so yesterday, Microsoft CEO Satya Nadella said, I just assume she's Italian, its Teams video calling app would integrate the Meta's Quest and newly unveiled Quest Pro VR headset, allowing people to gather in a virtual space akin to a boardroom. So, wow. Now, Smay, I want to throw it over to you. Would you want to meet in VR to have meetings with me?
I think I've been rather harsh on the idea of metaverse in the past, and I gotta be honest with you. I actually think it's pretty neat. I think that, even just T-Shroom, go back to that image that you were showing of like that. It's a little ridiculous, and it's a little There's a part of me that thinks, it's a little gimmicky. But there's a part of it that I feel like that would maybe kind of spruce up the mundaneness of meetings, where it's like everyone's looking all crazy, and you're an avatar and you're able to float around, and it's like a lot more immersive. I think.
Yeah.
I think it's pretty neat. I think it's a neat proposition. My problem is I don't think many other people are going to see it that way, because I've owned the Quest headset.
Oh, okay.
For a lot of you guys who know, but way back last year when we got the last stimulus check from Joe Biden, I used that to buy a VR headset, and I got criticized for it instead of buying crypto, but whatever. And but the thing is, the one thing about those headsets is that they're heavy and they're sweaty. So you put them on your head and your neck. It gets uncomfortable after like an hour, and so at the end of the day, I think in idea, it's neat. It's really cool. But in practice, no one's going to want to sit through an hour, 2 hour, 3 hour meeting with a greasy headset on.
Gotcha.
But at the end of the day, I think it's neat. And I think as the technology develops, it's going to have a lot more significant allure to it. But
absolutely.
Back to you, Teach Room.
Well, in the meantime, Meta is struggling to keep their stock price from going all the way to zero. I mean, it is really, really bad. How Meta's share has sold off. So hopefully this partnership will be fruitful for them going forward, because we do, Meta is an important player in the metaverse going forward, hence the name. And so we definitely want to see them succeed or, get out of the way and let competition rule the day. Moving right along, Grayscale, this is a big story. Grayscale files opening brief in the Bitcoin ETF battle against the SEC. If you're unfamiliar with this story, we're going to dive into some of the details now. So pay attention. Grayscale currently operates a Bitcoin trust product and had previously applied to convert it into an ETF. In late June, the SEC rejected Grayscale's application, citing concerns over market manipulation and the role of Tether in the broader crypto ecosystem. How that's related in the SEC's mind, we may never know. In response, the asset managers filed a lawsuit against the SEC, with Grayscale CEO Michael Sonnenshein saying he was deeply disappointed and vehemently disagreed with the regulator's decision. Grayscale filed its opening legal brief at the U.S. Court of Appeals for the District of Columbia Circuit yesterday. So that's important to know. That's kicking off. And I'm going to talk about why this is important for crypto in just a second. What stark arbitrariness cannot be justified or reconciled with the Commission's mandate to treat like cases alike. Rather, it can be only understood as a substantive judgment on the merits of a spot Bitcoin investment, the kind of substantive judgment that is outside of the Commission's authority. That's going to be the main legal argument that Grayscale is going to be trotting out. So why is this important? Well, if Bitcoin could get a spot ETF, then Bitcoin go up, essentially, is the long and short of it. And Grayscale, their lawyers are acting on principle. They're probably less interested in the price of Bitcoin. They're more interested in the fact that the SEC is basically telling investors in the United States, hey, it's not so much that we think that this is going to be a improper security or it has been improperly filed. We fundamentally disagree with Bitcoin as a commodity that you should be able to own as an investment bank or as a client investing through an investment bank. And so that's what Grayscale ultimately is coming through and saying, hey, this enough is enough. The SEC is acting outside of their scope and outside of their mandate from Congress, and it needs to be stopped. And we'll see how this lawsuit turns out. I mean, they're in a pretty big court here. They're in the appellate court of D.C., the D.C. Columbia Circuit. So, they're not messing around. There's only a couple courts in between them and the Supreme Court at this point. I don't know that it's going to go that far. Might have to, but we shall see. Folks, that is going to wrap up your Market Pulse. Thank you so much for watching. I've been T Shroom. I'm not going anywhere for the rest of the show, but I have been T Shroom, and you can find me on Instagram and Twitter at T Shroom. And I just really appreciate you, staying tuned and following what matters in crypto news as we've gone over today. Folks, we're going to be getting into some community discussion towards the end of the hour, so around 11 o'clock Eastern Standard Time. So definitely be tuned, stay for that to listen to questions that are being asked, and maybe even ask a question of your own. And myself, Caleb Franzen, or Smay will diligently respond to those questions, and we'll have a good old time. Also, Caleb Franzen is joining us here in just a few minutes. We're going to be discussing the CPI print tomorrow, what kind of our predictions are, what the implications can be for which way it goes. And then also we're going to be getting a little bit more into the PPI here, the print that happened this morning, and whatever else Caleb wants to talk about. Maybe we'll share a joke or two. It's always a good time with Caleb around. Let's get into some TA here. And it's been a while since I've done TA publicly. I do it all the time for my own personal investments. So let's give it a shot here. But I'm no TA Tim. Tim is definitely really good at this, and he sent me some notes. So what I want to preface our TA with is that tomorrow is so big that the TA for today almost doesn't matter, right? Because we're about to just get a giant amount of data that is either going to send the market pretty bullish or potentially very bearish. So take everything I'm saying with a grain of salt. You know, if you're trading today, I would say don't, because you're probably going to get totally washed out tomorrow. And depending on, there's a 50-50 chance that you're going to get washed out tomorrow, depending on what position you're in. But what is bullish on the 4-hour for Bitcoin is that there's a bull cross here. So that could potentially turn into something by the end of the day. I mean, technically there's, a whole trading day here that, the market is going to have to move in one direction. It's not like it's going to just go sideways forever, or maybe it will up until tomorrow. But yeah, so that's going to be your TA on Bitcoin. Honestly, if you want to look at more TA, I would say go back and watch Tim's TA analysis. But right now, it's hard for me to say much. I mean, the RSI, if you take a look at it, it's down. It's got room to run, right? But right now it's dominated by the bears. It's in that zone. But ultimately, like I said, it's kind of just anybody's call today, because the markets are just, it's a betting. It's a casino today, right? Because tomorrow is when there's actual tradable data. Right now it's just all smoke and mirrors and vapors. And what's going on with ADA though? There is some bullish divergence here on ADA on the 4-hour. As you can see, the RSI is moving upward and the price is generally moving downward in this downtrend here. So that is bullish. That is just meaning that, the bulls are deceiving the bears effectively, letting the price go lower when ultimately it's going to spring back up. At least that is what it means from a technical standpoint. But again, as we march into tomorrow, everything's going to change one way or the other. Atom is reacting pretty interestingly on its Fibonacci levels. So you can take a look at this. And Smay, I hope you're on my screen. I'm just kidding.
No, I haven't been this whole time.
So as you can see, it actually. So this is Atom. This is Cosmos. It has rejected the 0.236 level. It failed to cross over that, and now it's coming back down. More than likely, it's going to take another 7% drop down to 0.382 level of the Fibonacci. Could even test lower. But look, this has just been such a predictable, nice little price channel that it had through mid-June to mid-September before it broke down through this support and turned it to resistance. But what you can notice here is that there's so many beautiful lines of support, especially like, oh wow, that was a great line, especially the one that it's on right now around 1190. And then you've got all of these all the way down. So this one's right in sync with that 0.38 Fibonacci level. And then this one right here is in sync with the Fibonacci level too. So it's almost kind of pointless to point these out because the support levels are right in line with the Fibonacci. And you would expect that from such a neat, tidy uptrend in any kind of asset. When it does this so nice and neatly, that just means that, there's a lot of day traders playing along and, playing there's not a lot of contrarians trying to like get in there and manipulate and move the price up or down in a certain direction to throw off traders. This is just right up the middle. People are seeing value in this product, in this token, and they're just buying it. So, and then, until now, but this is, I would say this breakthrough, the support is more contingent, more a product of, what we're going to experience going into November, the potential new rate hikes. This is more than likely pricing in. I'm spending way too much time on Atom, guys, but this is more than likely pricing in what's going to happen in November and what the Fed is doing. But overall, this is healthy. All right, moving on to DOT. I just cannot get away from Atom for whatever reason. But look at this. So this is DOT. You can see that it's been in this nice little tidy channel on the daily ever since the 19th of September. What are you snickering about over there, Smith?
I'm not snickering about anything.
You better not be.
I'm not.
I'll come over there and give you a reason to snicker.
No.
All right.
I'm not snickering about anything, teacher. And please get back to your TA.
Ever since the 19th, DOT has just been in this
I'm sorry. I'm going to mute myself.
This tight little channel here that could potentially turn into a pennant, but I'm not seeing that just yet. As you can see, though, down on the hour, I believe I made a nice little, I made a nice little rectangle here of if you were, if you're down to day trade, you could be buying here and selling when it comes back up to these levels, just kind of nibbling on it, as it comes down into this range, into 617, maybe nibbling on it. And, then DCAing on a short time scale. It's a totally different concept of long-term DCAing, just kind of as it comes down lower, and then just buying it up. And then when it inevitably comes back up, you could just sell it. That's just a general day trade strategy. But would I recommend that right now? If you're not a day trader, no. If you have no experience, no. You should not really be making any new positions in the market today unless somehow you have some inside information on which way the CPI is going to print tomorrow. Well, that is going to conclude my TA. From here, what we're going to do is we are going to eminently get into the discussion with our guest. But before we do that, what I want to do is get into the question of the day. So let's go.
Don't we bring him on first and then do a question of the day?
Well, yeah, absolutely. So what we're going to do is we're getting into the question of the day. But first, let's introduce our guest, Caleb Franzen. It is Caleb Franzen Wednesday, my dudes. What is up, Caleb?
Okay. Guys, great to see you. This was perfect timing. I literally just joined in like 15 seconds ago.
Yikes. Awesome. Look at us. We're so organized.
That's hilarious. Well, the first thing you should notice, Caleb, is that Smay is trying to look like you. It's almost Halloween, and you are his Halloween costume.
The problem is, Caleb, I see that now you grew out a mustache, and I can't, for the life of me, grow out a mustache, so you beat me. I can't do it.
Listen, neither can I. This is 2 weeks in. My girlfriend started to like it, so I'm keeping it for the meantime until she tells me it's got to go.
Oh, well, there you go. That's all that matters. That's all that matters.
I like it. I think it looks very Air Force. Very good. So before we get into
Air Force?
Yeah. If you know, you know. And obviously Smay doesn't, so that's okay.
Seems like T-Shrim's an Army guy or something. I don't know.
Moving along. We've got a question of the day. Smay, you do not need to go to my screen. It's a little bit of a peculiar question here, Caleb, so brace yourself. But the question of the day is, would you rather accidentally swallow the Geico lizard or wake up married to Progressive's flow? So I'm going to read that one again, and obviously you can tell this is car insurance themed. Would you rather accidentally swallow the Geico lizard or wake up married to Progressive's flow? I'm going to throw it to Caleb first. What do you think?
If I could somehow adopt the voice of the Geico lizard, that sounds like a great option to me.
So you just like absorb his essence?
Yeah, exactly. If I can somehow adopt the Australian accent and just sound epic all the time, I'm all in.
I like it. Smay, what are you thinking over there?
I'm gonna be honest with you. All right. I think Flo's been at it too long. So I think she needs to retire from the Progressive commercials, in my opinion. So that makes it difficult for me. But I love the lizards, and I especially love the Geico lizard. So it'd be tragic to kill him and let him die in my stomach acid. So I'm gonna say that I'll take one for the team on behalf of the Geico lizard, and I'll marry Flo, but I'm not going to enjoy it. So back to you, T-Shrim.
Gotcha. I would swallow the lizard because I am deeply in love with my girlfriend, Amanda, and if she's watching, I love you, baby. And
smooth.
Oh, my gosh. Anyways, get at it. Get back into it.
So that's where we would land on that. But we're going to get into our discussion here, which, believe it or not, Caleb is not here just to talk about lizards and car insurance. Funny jokes. We're going to be talking about some hardcore economics here in just a second. But before we do, Smay is going to tell you who is sponsoring this awesome discussion.
Oh boy, would I love to do that. Guys, this video is sponsored by Hedge. And Hedge is a payroll conversion solution that allows you to convert your money that you get from your direct deposit directly into cryptocurrency and have it directly sent to your private cold wallet of choice. It is super intuitive, amazing. We actually even put out a tutorial for you guys who maybe get lost on their website to know how to fix it and do it and set it up. And guys, this is the best way to possibly DCA because you don't even have to think about it. You set it up, set and forget, and now you never have to log on a pesky exchange.
Oof.
And what you can do is if you want to change your allocation, say, oh, I've been getting Bitcoin paid to me for 3 months. Now I want to get some Ethereum. You can set that up with your allocations in the website, and it's perfect and it's amazing. So go check out Hedge, link below.
Absolutely. Thank you so much, Smay, for reading us that awesome sponsor who's making it happen for you guys. Definitely go check out that link down in the description below. Well, we're going to go ahead and kick off our discussion today. We got a fresh print from I wanted to say fresh prints of Bel Air there. A fresh print from I believe this is the Bureau of Labor Statistics. Maybe not actually, because it's not, but we'll see. It doesn't matter where it comes from.
There's a fresh print, is what you're trying to say.
Doesn't matter where it comes from. It's impacting the markets. This is the PPI number, and let's get into it. It came in hotter than expected, and I want to get your thoughts on it, Caleb, before we get any further.
Yeah, so I just kept it kind of surface level with this one, just trying to, again, keep in touch with at least what the Fed is looking at, what they're seeing. Obviously, I think a big component here is the fact that we're coming in above expectations. And I think, that's partly responsible. Last I checked, markets were down. So, that's still going on. We still have all the risks associated with the BOE, but I think just staying focused on the PPI for a second, right? I think we came in at 8.5 and the expectation was 8.4. I'm not sure exactly what the prior month figure was, but I do know on a year-over-year basis, we did decelerate once again. And I think that's a key thing for people to focus on. People are, I see people on Twitter saying the trend is down, right? And they're saying, oh, the PPI is falling. No, again, we're in a car on a freeway going 75 miles an hour. We see a police officer ahead and we need to slow down to 65. Just because we decelerate by 65 to 65 miles an hour doesn't mean that the car is, reversing, right? We're just simply slowing down, but our trajectory and our velocity is forward, right? Yep. And so this is very important to know, is that we're not necessarily decreasing, we're simply decelerating. And so when we think about rates of change, which is what the PPI is looking at, when we look at the percent change, because the PPI is the producer price index. So the Fed tracks this index, a basket of goods, if you will, or producer price inputs, if you will, and they measure a rate of change. So we have a first derivative. And then when we look at the rate of change between the monthly results, that's a second derivative, right? So again, like someone was telling me again, like, oh, you only need second grade math to look at the trend. No, if you use second grade math, you're going to get second grade results. We're all adults here. Let's act like economists.
Wow.
Boom.
Like I said, hardcore economics here, folks. You're getting the hard-hitting truth.
I wish I could relate to that statement.
But yeah, I mean, my reaction to this is it's yet another. So this is the second real headline that was good news for the economy, but bad news for the market, right? As it kind of comes in. So similar to the unemployment, which was as much as it's positive that less folks are unemployed, it does give the Fed, the green light to be more hawkish. And this kind of does the same thing. I wouldn't necessarily say it's like excellent news for the economy, but it's moving in the right direction. But as Caleb has so astutely put, it's not moving in the right direction anywhere near fast enough. And it definitely is not within a range that you could say that the Fed has come anywhere near close to accomplishing their goals. But let's move on, because the PPI ultimately, it's a little bit of maybe a preview of what's to come for CPI, but it's also not. Like you can't, it's not one-to-one predictive in any means. If it was, then this would be a way bigger story. So, this isn't like the biggest thing ever, but it gives us a little bit of an indication. So let's move on to the CPI print tomorrow. I kind of want to hear what your prediction is based on like the different prices of inputs we do know the prices of commodities and how they've changed since September or through September. And that ultimately is what the CPI is measuring. It's measuring how expensive things got in September for people, how whether it's groceries, whether it's gas, and whether it's shelter, some of the major components there. We want to explore today on before we get the print tomorrow, kind of what we might think that CPI print is going to be. And I have my thoughts, but Caleb, I want to throw it over to you, and you can feel free to share your screen if you have any visuals for this one, or just keep it verbal. But yeah, so what do you think is going to happen tomorrow for the big print?
Thanks, T-Shroom. So yesterday I was having some private DMs with our mutual connection, Kelly Kellum.
Nice.
And just kind of talking briefly about some of my expectations for tomorrow. And this was prior to me even looking at what the estimates and expectations are for tomorrow's number, which I know now at the present moment that I think people are expecting 8.1% is the median projection.
That's right.
But I told Kelly my essentially 95% confidence interval is between 8.2% and 8.5%. And for the prior month, I think it was 8.3 to 8.6, and we came right in at that 8.3% number. And so I have a couple of reasons as to why I expect headline to decrease. I think basically since June, I've kind of been positing that, it's very possible we've seen a peak in headline inflation. And especially as the data has continued to come in, I've been saying, but I don't think we've seen a peak in core CPI, right? So if we look at all of these alternative underlying measures of inflation, whether, like I said, it's core, whether it's trimmed mean, whether it's median CPI, sticky price CPI, all of these other metrics continue to accelerate to the upside, which is really highlighting some of these underlying, inflationary dynamics. And, I remember being on your guys' show talking about how for like the first decrease from June to July, that a lot of that was, if not all of it, was due to declining energy prices. So we had this disinflationary dynamic from falling crude and energy prices. Yeah. And so I think from my perspective, that's something I'm still very dialed in and focused on. So I'd love to share one chart with you guys.
Absolutely.
That I've really been using to kind of track and monitor this, not necessarily in real time, but to give some sense or gauge for how CPI could evolve. So what I like to do here is I go to the Federal Reserve's economic database. And what we can do here is we can look at crude oil prices, so WTI, specifically in Cushing, Oklahoma, right? And this is a massive kind of production center for crude oil in the United States. And what we can look at here is the average monthly price, okay? And so what we can see is that, we obviously peaked here in June. Let's just call it at $115 a barrel. And then we've fallen considerably. August was at 93.7. And now for the month of September, we fell all the way down to 84.26, right? So that 93.67 to 84.26 is pretty significant. And so again, this is showing, I expect again on a month over month basis to have deflationary pressures from falling crude and energy prices, but I still expect this on the aggregate to be disinflationary because we're still in an inflationary environment. And the last thing I want to share on this is if we instead look at not the dollars per barrel, but what we can do is we can actually measure this on a percent change from 1 year ago. So we can measure average WTI prices in the month of September 2022 versus September 2021. And so if we do that, we can really see now, let me get rid of that, thank you. We can really see now the deceleration that took place, right? We had a massive peak back in early 2021, but this was really due to kind of the wonky stuff that was happening in April and May of 2020, right? If you remember, we had negative crude futures pricing, right? That was just so bizarre. Right. So we expect to see this big deceleration because of the crazy results that we had there. And so we can see on a year over year basis, this has declined to 17.6%, whereas in the month of August, it was 38.3%. Wow. So that's more than half of a decline on a month over month basis in terms of the year over year rate of change. So again, this is where I do really expect to see some disinflationary dynamics once again for the month of September for headline CPI.
Absolutely. Yeah. And I cannot agree anymore. I talked about this in office hours that I've been doing. And, it's kind of, and if you're kind of new to energy prices, if you're in crypto, you're probably not thinking about energy prices too much unless you're a miner. But if you go to my screen really quick, Smay, just to kind of summarize everything that Caleb said, which I pretty much 100% agree with, it's basically like the economy has been running off of this price of oil, right, through the summer. And that was a higher than usual price of oil. And so it's just expensive. And so that makes that higher cost gets passed down to final goods. And those final goods are what CPI is. It's pricing what those goods are. And so as that price comes down, the economy is actually producing goods that are cheaper because the input cost of energy is going lower and lower. And right now, we are about to see the CPI print of September. And I'm reiterating exactly what Caleb just said with pretty much the exact same chart. This is just crude oil. But ultimately, we're about to see the lowest prices that we've seen in the last couple months for energy get trickled down into the CPI print. Now, it's not going to be, now as you can see, it's probably not going to be the same story for October's print that's going to go in November. But, all in all, we are about to see the lowest oil priced CPI for several months. And so that's going to be reflected into the headline CPI. But shifting over to the core CPI, correct me if I'm wrong, but according to the website that we use to track this, dailyfx.com, they talk about how, on my screen you can see, they exclude volatile food prices and fuel costs. So tell us a little bit about how core inflation is different from headline inflation. And for those of you who already know, just hang tight. This is for our noobs.
So yeah, this is basically, they kind of hint at it there, but core is simply measuring a basket of goods and services within the economy that consumers are spending on, excluding food and energy prices. And this is, just another gauge that the Fed uses, because from their perspective, and I think from a lot of economists' perspective, food and energy prices can be very volatile. They're very subject to supply shocks. And so as we really try to get a pulse for consumer spending on, a general basket of goods and services, it can be useful to exclude food and energy prices. The problem with this is that, if we think back to where we were in, let's call it Q2 2021, so just over a year ago, a lot of people, specifically members at the Fed and people who were saying that inflation was going to be transitory, were pointing to core CPI and saying, well, look, it really hasn't accelerated that much. All of this is really due to base effects and because of higher energy prices and this, that, and the other. And now here we are today, and core is continuing to accelerate higher and higher, right? I think it's at like 40-year highs essentially.
Yeah.
And so the core is certainly something to track and look at, but it should not be the end all be all. And the Fed doesn't target a certain rate of change in the core CPI, right? They're targeting that for the headline CPI, and you could argue for the PCE. And so as we think about core, it's something that we should have as an input within our process to assess the market, to assess the economy.
Yeah.
But by no means is it the end all be all.
Yeah, absolutely. So let's take it a step further down the chain to where it reaches crypto. And I'm going to ask you kind of what we cover every single day in the market pulse. Do you have any reason to believe that we're not going to get what the CME future tool is predicting of 75 basis points? And they're predicting right now, as of 10:41 Eastern Standard Time, an 85% likelihood of a 75 basis point hike, as the Fed is looking at the data that it has so far from September. And it's about to get, and the market is predicting that the data that we get tomorrow is also going to incline Jerome Powell to continue to think 75 basis point is the right decision to go. Do you have any reason, any kind of countervailing thought about why that would not be the case?
I don't. I expect them once again to move 75, which is such kind of a bizarre place to be in, considering what market expectations were in November and December of 2021, right? Remember, at the time, market participants and the Fed was even signaling that, we would maybe have 2 to 3 rate hikes for the entirety of 2022. The expectation was that each rate hike would be 0.25% and that they wouldn't start until the second half of the year. And it's just been such a massive shift. This has been a historic monetary tightening cycle, and we're essentially 6 months in. And, I don't have a crystal ball to say how long it's going to continue, but I think just to play devil's advocate on my affirmation of another 75 basis point rate hike, if this is a massive if, I just want to be very clear, but if we see a CPI print tomorrow that maybe comes in at 7.5% or maybe 7.7%, I'm not sure, around that area though, right? A considerable decline on a year over year basis. And let's say a month over month change of like negative 0.5 or 0.7% as well. I think that would shift the favor of a 50 basis point rate hike. That's what I'm trying to say. And so, the Fed needs to see signs that the monetary policy actions that they've already done, the rate hikes that they've already done since March, are having their ripple effect. It's very true. Monetary policy and these rate hikes operate with a lag. So it's going to be a ripple effect in terms of how long it takes to impact the entire economy. And it starts with the financial system first, right? And then it tries to trickle out into the true economy, if you will. And so, that would be my full kind of context and commentary on that. But again, from my perspective, I expect to see another 75 basis points.
Yeah, as do I. Well, it's interesting that you brought up the 2021 dot plot predictions, because I was referencing those the other day, so I've got a fresh link for that. I don't know if you can see my screen or not, Caleb, but as you can see in 2002, this is what the Fed was predicting. Their top board voters were predicting that their rate would be at basically 0.75. So right now we're at what, 3.25?
But if you think about it in terms of what the median point is on that dot plot, right? You see there's a big congregation of voters who are in the first and second third of the pyramid, if you will, right? So if you go back to that chart, you could see that I think it was only 4 voters got into that 0.75, or 3 voters got above that 0.5% range, right? So if you look at the what the median was, it was maybe, 0.4 or 0.3.
Yeah. So it's wild. And it just goes to show just how wrong they can be. Now, what I would say is that they don't publish these dot plots and saying like, this is what it's going to be. It's
Correct.
where their heads are at that given time, and the markets can react to that. Now, every subsequent dot plot, you'd have to assume moving into the present, they would have to adjust those, upwards, and then the market would adjust accordingly, as we have seen, obviously to the downside. So, Will, I want to move on unless you had any other comments on CPI for tomorrow. I think we covered it
There's 2 things I'd like to share with people, because
absolutely.
basically since May, I've been focusing on 4 primary dynamics that at the time I didn't think inflation had peaked. One of them was supply chain dynamics. Those have improved substantially. Another one was a wage price spiral. We continue to see those. Another was credit creation, and another was the commodity pricing, right? So we covered commodities. I don't really think we need to go into supply chain issues. I'd really quickly like to just share my chart on 2 things, which is the credit creation dynamics and the wage price spiral. And so what we're looking at right here is total loans and leases in bank credit issued by all commercial banks in the United States. And it just hit a new all-time high. This is the latest data that we have as of October 5th, but it came in at just shy of $11.7 trillion. Wow. And so we could see this is a massive all-time high. And what I'd like to do actually is, again, flip this data and look at it in terms of the year-over-year percent change, right? So this is relative to the beginning of October 2021. And so we could see the pace at which credit creation is either expanding above the zero bound or declining below the zero bound. It's very rare we get negative year-over-year growth in credit creation. But what we can see is that the current reading is at 11.9, or excuse me, it was at 11.84%. It's currently at 11.7% year over year. But generally speaking, it's quite, I don't want to say it's rare that we get above 10%, but it's certainly above the average, right? I think I calculated the average at one point, it was around 5 or 6% year over year. And so when we look at credit creation expanding basically at almost a 12% year over year rate of change, this to me signifies that money is leaving commercial banks, it's leaving the financial system, which largely benefited asset prices. And now it's actually entering the real economy. And so as we think about classic kind of monetary economics, if you will, this is partially one of the definitions of inflation, is that inflation is everywhere and anywhere a monetary phenomenon, right? And as we have more money entering the real economy, so to speak, which is illustrated by an increase in loans coming into the real economy, we really do have more money chasing fewer goods, which is likely to keep inflationary pressures elevated. This doesn't necessarily mean to say that inflation is going to increase on a year-over-year, month-over-month basis, but simply that it's going to keep inflationary pressures elevated. That's the first point I'd like to make. And the second point is, if we just look at the Atlanta Fed's wage growth tracker, we're continuing to accelerate significantly. This midpoint here is the overall unweighted index. Came in at 6.7% for the month of August. But the thing that I really like to look at, if we uncheck the overall unweighted, in the top here, we're looking at job switchers, and in the bottom, job stayers. And we see this massive divergence in people who are having massive wage growth when they leave and switch jobs versus staying at their own company, right? And so this is very important to watch, because it highlights why the quits rate is so elevated right now, because people are chasing opportunities to have higher wage growth to keep up with the rate of inflation. So again, this creates kind of it's referred to as a wage price spiral. And so it creates this recursive dynamic where employees need to keep up with the rate of inflation. So they go out into the market and they find jobs that pay them more, but at the same time, that only increases their propensity to spend within the economy, therefore increasing inflationary pressures. And you create this kind of, like I said, it's really a recursive cycle that feeds into the inflationary dynamics.
That's fascinating, man. And I love that you scrape the corners of the macro narrative to try and find this type of stuff. I love that. I was not privy to seeing the percentage increases of credit, increasing, and that is compelling, right? So basically to dumb that down, for basically, individuals are paying for more things with credit, and essentially that's what that means, right? And so their tolerance for higher prices using credit is got to be less, right? Because if you're taking out and paying with hard-earned money for a more expensive banana, you're going to feel that pain a little more versus if you're just swiping that credit card and you know you're not going to have to pay it until the future. So, what that does is you're right. It just continues to have inflationary effects. So, dumb that down even more is, when you have the ability, when you're seeing increased rates of credits, that means people are just spending more dumb money, and more dumb money just incentivizes the entire it sends a negative it sends a false positive signal to producers that it's okay to sell their goods at this price. And
Correct.
so that's how you get a distorted market is credit can absolutely distort the market if there's too much of it. So that's awesome that you're raking that kind of stuff, and you're scraping the internet for that kind of stuff to find it in the Fed website. I didn't realize that they even covered some of that stuff, so that's super cool. Is that some of the stuff that we could expect to find in your newsletter there, Caleb?
Yeah, it absolutely is, man. I've been trying to kind of pound the table on this commercial loan growth for a while. And just to be clear, this, it certainly includes consumer loans. So like what credit cards and things like that, but it also includes loans to businesses and other entities, right? So again, this is, looking at the holistic market for loans and leases to both consumers and to businesses and corporations. And so this is definitely something I've been laser focused on even since the beginning of the year. But I've really kind of been trying to pound the table on it since May, because we really had, again, it was like such a V-shaped recovery in terms of the growth rate. It dipped negative slightly. I think at the beginning of the year, I still have the chart up. I won't share it. But for example, let's see. I'm looking here on December 29th, 2021, the growth rate was 4% on a year-over-year basis. So relative to December 2020. And again, like I'm saying, today we're just shy of 12%.
That's crazy.
So we've had this massive acceleration in credit creation, right? And that's, again, important to note, is that money is entering the real economy at a faster and faster pace because businesses are borrowing, consumers are borrowing, and theoretically they're spending that money. They're using it to expand production, to invest in CapEx, this, that, and the other.
Yeah.
And we can look at other tools to kind of evaluate that a little bit. But either way, the takeaway is the same. We have more money entering the real economy, chasing fewer goods, right? We need to contextualize this against the fact that we've had 2 consecutive quarters of negative real GDP growth. So by definition, output is declining.
Yeah, absolutely.
Yeah.
Well, what I want to get into now is a big fundamental update in what Tim and I have been tracking at the macro level, which is just pretty much a collapse, you could almost call it at this point, in international currency versus the dollar. And this is something I know that you keep up with to some extent. But yesterday we had a huge update in the Bank of England, and then this morning they actually reversed it, which isn't healthy for the markets, or maybe not reversed it, but they said that they're kind of walking that back a little bit. But one of the voting members, if not the president, I don't know how they're structured over there at the Bank of England, but they came out yesterday and I got a funny story to tell about this, actually, before we get into the question of it. But they came out and said that their bond buying policy is going to end by Friday. So all the pension funds need to go ahead and sell us your bonds, and we'll be the final buyer of last resort for those bonds. But you're going to need to do that by Friday. Well, that kind of spooked the market, right? And the funny story is, I was sitting there, working, but I also always, almost always have my charts up, and I was listening to a live streamer, and when that came across the wire, the news wire, he started freaking out, and I bought the SQQ right there immediately and wrote it up 3%. So, and I switched over to the minute chart, and I was just having a degenerate trading moment, and I don't recommend doing that. I traded with what I could afford to lose. And I made a little bit of money, made a little gain, a quick little 3% in like 20 minutes. So that was fun, but it's not fun for the economy. This is getting crazy. Things are breaking at this point. The central banks should not have to be issuing memos weekly to pension funds to tell them how to de-risk for their clients. It's insane. And I kind of want to get your take on that development yesterday, but just on currencies generally versus the dollar.
No, those are great points. And I love that you had a little bit of a degen moment and you captured the gains. You were on the right side of it. So congrats.
Yeah.
And full transparency, I am long a 3x inverse leveraged FANG ETF.
Gotcha.
The ticker symbol is FNGD. It's not a recommendation to do it, but I have this hedge strategy working right now, which is I'm long FNGD, which is basically betting against the market.
Mm-hmm.
And I'm also long the 2x leveraged ARK ETF, TARK.
Mm-hmm.
So I have this kind of, I'm basically betting on volatility is how I'm seeing it. And I'm trying to essentially farm gains.
Yeah.
And it's working really well for me so far. But anyways, I feel you on the degen kind of moments.
Yeah.
It's very hard not to get involved in some form or capacity in this market. But,
yeah.
I think it is kind of a strange environment that we're in, where, like you're saying, in a lot of ways, it seems like what the Bank of England is doing is taking 2 steps forward in terms of giving this very kind of aggressive or hawkish, if you will, stance and communication to their financial system and to the UK pension funds. But then at the same time, taking 1 step back and trying to walk some of that back, right? And so at the end of the day, if they're going 2 steps forward, 1 step back, at the end of the day, they are essentially tightening in a way in terms of their rhetoric specifically. I made an offhanded remark on Twitter. I think it was yesterday, actually in the morning prior to the announcement. But I said, there's nothing more permanent than temporary monetary stimulus.
Yeah.
And, I think that's a valid assessment. We'll see how all of this shakes out. I think markets, the big interpretation that I had from this is markets are increasingly clinging to information about the direction of global monetary policy.
Mm-hmm.
And at the very least, all this does is highlight the dependency of asset prices on interest rates.
Mm-hmm.
And so, and monetary stimulus for that matter, right? Because they are connected.
Mm-hmm.
And so regardless of what the Bank of England does and how quickly that change comes upon us, and by no means am I an expert on foreign central bank dynamics, right? I'm really, my focus is the Fed and
Mm-hmm.
primarily the Fed. But I certainly do keep up with global central bank activity. And, I think, like I said, regardless of what ends up happening and unfolding in terms of their policy decisions, I think at the very least, this does just continue to show us bulls are clinging to any sense of relief in terms of monetary stimulus.
Mm-hmm.
Again, when, think back to last Monday and Tuesday, we're having Credit Suisse dynamics. We're having this UK pension fund thing.
Yep.
And all of a sudden, markets are ripping. They go on their largest 2-day streak of a gain since March of 2020, with all of this kind of doom and gloom headline coming out.
Mm-hmm.
Now, as soon as he's saying, look, we're going to pull away the monetary stimulus, the pension funds have limited time, this, that, and the other, they need to get their shit together, essentially.
Mm-hmm.
All of a sudden now, markets are pulling back. Like you said, SQQQ shoots up, right? That's the triple inverse leveraged NASDAQ 100 ETF.
Right.
So again, I think from my perspective, it just highlights the dependency on markets right now clinging to monetary policy dynamics.
Yeah. And they've got to clean up this rhetoric because it's so messy. Because, look, 10 hours ago, this tweet drops. Obviously, it's quoting the BOE signaled privately to bankers it may extend bond buying. So they tell the market yesterday, hey, we're going to end our bond buying policy, which is probably going to have a tank-ski effect on your equities, whether it's in Europe or the US or in Asia. But then they go privately to the banks. And that's kind of sick, honestly. I think that's kind of unethical if this is actually true. They go to the banks, and I'm assuming this means private UK banks, and they say, yeah, we're going to go ahead and probably extend those bond buying. That's sick. That's insane. But it shows that, the Bank of England's kind of up against a wall right now. They're having to speak out of 2 sides of their mouth, and that's scary. And this, when I asked you earlier what could be kind of a countervailing narrative for 75 basis points tomorrow, I think this might be your strongest argument here, is Jerome taking a look at central banks abroad and saying, hey, maybe we should pump the brakes on these rate hikes. Also looking to the Japanese market and saying nobody's buying their bonds. Nobody's buying Japanese bonds right now. I think it's not halted. It's not the regulatory halt, but there's just zero volume apparently on those bonds. So at this point, it's like things are breaking. It might actually trickle into Jerome's brain to maybe pump the brakes and do a 50 basis point hike. But what I want to do is gaze into the future, because more than likely Jerome is going to do 75 basis point hike unless something crazy happens at the BOE today and something happens to their gilts, the UK bonds, or if the inflation print tomorrow is like what Caleb said, somewhere 7.5 or below, that could potentially change Jerome's mind. But let's look into the future, not November, of December, because I believe that the quantity of rate hikes that the FOMC reported that they're looking to raise in 2022, this year, is going to be, it's capped in a way that in December, it's actually looking like there's a possibility for a 50 basis point hike. Is that something you're tracking, and what do you think the likelihood of that is?
For which month was it?
For December. Yeah, for the
month of December. Yeah, I mean, it's possible. I mean, the thing is, like, think back like 2 or 3 months ago, people were saying we were going to get 50 bips in November and September. So yeah. I have a hard time. I'm always going to take the over, I think, in this environment, just because that's, historically what we've seen over the last 6 months is that monetary policy ends up being much tighter than people were expecting 1 month in advance, 2 months in advance, 3 months in advance, whatever the case is. Right. And so the trend is to expect a higher degree of tightening. And especially because the Fed has communicated that they are so data dependent, it's hard to say one way or the other. But again, I think, at least based on some of the charts that we were just looking at, right? If these underlying drivers of core inflation continue to remain intact, notably credit creation and the wage price spiral, obviously we've had a lot of relief, if you will, from lower energy prices, which is what's fueling, no pun intended, the decline in headline CPI.
Nice.
Thanks. Funny enough, I was like reading over one of my tweets and I was like talking about energy prices and the impact on CPI. And I did that fuel remark and I was like, oh, I didn't even like realize it in the moment that, it tied together.
It's wild.
Anyways, it's certainly possible we get 50 bips. Look, at some point, the Fed is going to need to pause. At some point, they're going to need to really take a hard look and assessment at the things that are happening on a global scale, especially if we do start to see inflation come lower in the US, right? If inflation does, really get on a track that they're comfortable with, and we're starting to see bigger and bigger cracks within the global financial system, they're going to need to pause and just assess what the market is doing and what prices are doing. And I don't think we're there yet, but the more time that goes by and the more rate hikes that we get, the closer we get to that pause destination.
Yeah.
So, that'll be interesting, but again, I'll refer back to a great comment from economist Mohammed El-Arian, who said that 75 is the new 25. This is the new normal. So,
yeah, no, absolutely. That's definitely still a narrative that's out there lingering. I don't feel like it got quite as sticky as I, thought it was going to when I first heard it, but it definitely is still out there. Well, we're wrapping up here our macro discussion, and as we do, I want to show you guys one more chart. But then we're going to go ahead and transition into an excellent new game that Smay has come up with, and he hasn't told me any details, but it's especially designed for Caleb Franzen and I to compete head to head, a battle of wits. But let's look at one more chart before we go. So I want to bring up the dot plot one more time of the Fed from 2021, and you can just see the stark contrast of what their decisions, what their perspective were on the economy. So, as you can see, the average consensus here in 2022 of what the Fed would be willing to hike up to was pretty much, you could call it 0.5, right? That's as high as it was going to go. And then in 24, their prediction, it's kind of hard to say, but let's say the median here was just above 2. So looking at what their prediction, their most recent prediction, you can see it has jumped so high. It's crazy. And of course, they're thinking that it's going to come down here, but we have yet to see it's going to come down in 24 and 25, 2024 and 2025. And in the longer run, it'll settle around 2.5, which is their target. I know they don't have a target for that. I'm getting that confused with the inflation rate target of 2%. But this is where I was thinking that this is kind of their upper level is basically 5%, but probably more accurately 4.75% is how high they're willing to go in 2023, right? And then going over to the CME Fed predicting tool, they are already betting on December 14th print of the interest rate. So it's not really a print, the interest rate decision, right? And that right now is pricing in the highest. I don't know because I haven't done the math on this, but they're pricing. I don't know. You might be able to do some quick maths on this if you can see it, but the CME futures is basically pricing in the highest that it could be. I don't know if this is 100 bips or 75.
I think it's 75.
Yeah,
quick maths.
that would make the most sense, but they are not predicting 50 in December. That might change come November 2nd, and it might change come tomorrow, depending on how the market digests the inflation print. Thank you guys so much for listening. What I want to do is give Caleb an opportunity to kind of talk about some of the awesome stuff he's been working on, and then we'll get into our special game.
Thanks, Taylor. If you guys like what I'm saying and like some of the perspectives that I bring, I really try to combine. I love coming on here to talk macro, but I've been absolutely obsessed with markets and the economy since like 2013. So, I really try to take this well-rounded approach to looking at markets through a fundamental monetary policy lens, but then coupling that with looking at price charts, looking at technical analysis, statistical indicators, looking at stocks, looking at crypto, specifically Bitcoin. So if you guys are interested in these different dynamics, definitely check me out on Twitter, just at Caleb Franzen. We got a big growing community over there. And then I also write a free newsletter that basically covers these topics every week. I publish it every Saturday. I spend every Friday night working on these. So, I'm really just trying to put out as much value as I can for people. And, thankfully we've been on the right side of the market all year pretty much. And so I've gotten a lot of beautiful messages from people throughout the year saying how much they've appreciated some of the perspectives that I've shared, even if they disagreed with them at the time. But in their reflections of how the market has unfolded, they've really enjoyed it. So definitely come check that out. It's cubicanalytics.substack.com. Again, that's a free newsletter. If you want to sign up for the premium version, got a lot of value going on over there as well. Sharing a lot of different things, mostly focused there on markets and investing specifically. So if you guys really kind of resonate with what I'm talking about at a surface level about the economy and what I'm seeing in the stock market and Bitcoin, but you want to hear more, again, I have my background is in commercial banking, which I did for just about 2 years. And then, various internships and other professional experience in banking and wealth management at Merrill Lynch. So,
awesome.
Would love to have you guys there. So come check it out.
Yep, and I cannot say how much I enjoy Caleb's Twitter. It's definitely worth it. If nothing else, definitely follow him on Twitter. And what we'll do now is we'll pivot into our game unless Smay corrects me and wants to go into our super chats, but I'd rather go into the game.
I would rather go into the game too there, Teach Room. So let's go ahead. I really had this one brewing. I'm really excited about this. I really was last night. I was sitting and I was thinking, I was like, what's a good way to integrate this special kind of show where we really focus on macro and we dip into stocks and other markets, traditional markets. So I've devised a new game. It is a derivative of Name That Coin. So if you guys have been watching, Caleb, if you've been watching, if you've seen Name That Coin, where it's basically you have 30 seconds to guess the coin based on my hints. Well, today you guys don't get any hints.
Ooh.
What you get instead is a picture. What I'm going to do is this game is called Name That Chart. So it's the same rules as Name That Coin, but what I'm going to do is I'm just going to show you a little snippet of a chart where there's no information other than the candlesticks.
Wow.
And you have to look at that chart and guess that chart. And just so you know, just so there's no curveballs, these are not all cryptocurrencies. There's actually only one of these that is a cryptocurrency.
Okay.
The rest are various indexes and stocks. Okay? So I took these screenshots, and also here's another thing, because I know you guys are frequenting the charts. All right, you guys are always on the charts, you hooligans. Here's the fact of the matter is, all these pictures were taken last night at 8 o'clock. Okay, so just keep that in mind.
They're fresh.
These are fresh. Last night 8 o'clock, and they're all daily chart.
Daily chart. Could you give us an idea of how far back they're measuring?
Yeah, that's
very small snippets. Like literally, like I would say, not even 20 candlesticks or so.
Okay, and each candlestick is a day.
Yes,
for all of them.
Yes.
Okay.
All right.
Okay, let's do it.
Are you guys ready?
Rules.
So we're gonna be. I'm gonna start. I accidentally switched to Tim's angle. Sorry, guys. I'm gonna now begin with Caleb. We're gonna start with Caleb. So Caleb, I'm gonna put 30 seconds on the clock. Okay.
Okay.
And basically, I'm going to show. So make sure you have the Zoom call up so you can see the picture, because I'm going to flash on the screen. So also in the chat, you guys can guess as well. So be sure to participate. But I'm pulling up the chart, so that's why I was stalling the countdown. All right.
Well, before we begin, and I know there's a lot, but Smay, is the game, the rules of this game also is if he can't guess it within the defined time, I get a chance.
You get
to
one
steal,
guess. Yeah, you get one guess.
versa.
Okay.
Okay.
All right. So.
Okay.
All right, you guys ready to begin? All right,
let's do it.
Let's go. Caleb, your first chart begins now. You have 30 seconds.
It looks somewhat like an ARC name. I'm not going with ARC though.
10 seconds left.
Let's see.
That's tough.
I'm gonna say Zoom.
And that is it. So T-Shroom, now you have an opportunity. T-Shroom. What is your guess?
I'm gonna say, let's do. Oh man, it's tough. It's something that's still
This is
up.
the first one, man. That's crazy.
I'm taking too long. I'd just say I know it's not right, but Microsoft.
And that was, ladies and gentlemen, that was Apple.
Okay.
So that in fact was Apple. All right, T-Shroom, you ready to be put on the clock? So guys, keep in mind I didn't dig too deep. All right. So these are all whatever was on like the watch list on TradingView. So just keep that in mind. All right.
Okay.
You ready? You guys ready to jump into the next one? T-Shroom.
Yeah, let's go. Let's do it.
And you're on the clock. Boom.
All right. It's on the NASDAQ and it's even. So it's not back at its June highs. I'm going to say yesterday at 8 o'clock.
Notice there's also price data in the top left.
Yeah. I'm going to go.
5 seconds.
Oh, man.
2.
I'm going to go Amazon.
Okay.
Okay.
That was Tesla.
Oh, I was thinking Tesla too.
Oh, come on, guys. This is 0-0 now.
Wait. You were supposed to give
Yeah.
Caleb a chance to guess.
Oh.
I wasn't gonna guess Tesla, so.
Oh, there we go. All right. Well, I messed up my own game. Thanks, T-Shroom, for telling me that.
It's okay.
All right. Next, Caleb. I'm about to put you on the clock.
All right.
And this time I'll actually give T-Shroom a chance to steal. So, all right. So here we go. Starting now.
Oh, there's a big hint.
Yeah.
Yeah, this is some sort of crypto.
15 seconds.
Trading below the June lows. Damn, this thing is getting wrecked.
I think I know what it is.
I don't think it's Cardano, but I'll just go with that.
You are wrong.
Wait. Yeah.
I'm not gonna say what it is.
I think this is the Great British Pound.
Wow, you guys are both wrong.
Oh,
Guys,
yeah. Owanda is
It's Forex.
FX, isn't it?
Yeah.
yes. So guys, that was the euro over USD.
Oh, it was close.
All right. So come on. This is a lot harder than I thought it was gonna be for you guys. And
Yeah,
chat.
it is.
And the thing is, what's crazy is chat has been crushing it. So
Really?
yeah, they've been guessing these really well.
Well, they
So-
have a lot more resources. We're not allowed to Google stuff. so.
That's true. All right, so guys, T-Shroom, you're about to be on the clock.
right.
Literally, all you have to do is just guess this.
So
I mean, at this
0-0.
point, because it's 0-0. So just guess this. There's also one more after this.
And I take it. Okay.
All right. Okay. You ready?
Yeah, I'm ready. Go ahead.
3, 2, 1.
Oh, goodness. There's a lot less hints in this one.
Yes, sir.
I think I know it.
I had a feeling Caleb would get this one.
Is this the last one?
No, there's one more.
Okay.
You have 10 seconds.
So it's 50-50 that this is crypto. I'm going to say... Oh, man.
Okay, final guess.
I'm going to say oil.
All right, Caleb, you have your one guess.
Is this 10-year treasury yields?
Ah.
All right, guys. Good
Is it the
grief.
dollar? Is it just Dixie?
Yeah, this is Dixie.
Oh, there you go.
This is the Dixie, guys.
I think that's
Come
a
on.
point. I think that's a point.
That's not a point. That was the second guess.
No.
It's not a point. We don't give sympathy points here, T-Shroom.
Yeah, but this game is so hard, though.
All right.
I think this is a good game. We just need to figure out a way to get one more clue in there.
No, you guys just need to look at charts more. All right.
Yeah.
Let's see. Caleb. Caleb.
That'd be unhealthy, man.
All right, Caleb. I'm about to put you on the clock. This is your chance to run away with this. If this ends up 0-0, this is gonna be pretty tragic. Okay, so Caleb, you have an opportunity here. To run away with a 1-point victory. This is like soccer. No one ever really scores.
Yeah.
All right.
Yeah.
Football.
3, 2, 1, go.
Bitcoin.
Hey, woo!
Oh!
Let's go!
Caleb,
Let's go, Caleb. Let's go, Caleb.
on,
he
man.
wins. He wins. That
And they
was
say
Bitcoin.
I don't know about crypto. No, I'm
Dude,
kidding.
dude, that was so fast too, T-Shroom.
Yeah.
Come on, man. You gotta look at charts more. What's going on?
Well, I couldn't guess.
Should we give T-Shroom a double or nothing attempt here?
See, okay, so I would, but I don't have another.
Yeah.
I don't have another chart. I don't have another chart.
Can I pick a chart?
Yeah.
Go for it.
Go for it.
Yeah,
Pull up
go
the chart.
for it. Take your time. What we're gonna do
Let
after
me
this,
think here.
is we're gonna get into our super chats. So go ahead and leave a super chat for us and let us know what you're thinking. You can ask us about anything, literally. You could ask us about.
I would say also let us know how you guys did in the chat. Let
Yeah.
us know if you get it, how you did it. If you guessed all of them right, or if you guessed some of them right.
Yeah.
So that's a fun game. I think I want to see how, because T.A. Tim, T.A. Tim is a character on the show. I want to see how he fares. I think next time though, if I do it with him, I'll do all crypto charts.
Yeah, you have to do crypto.
I'll do all crypto charts, but we'll see how Tim fares at this game. I feel like he has what he likes to call chart vision. So we'll see.
Yeah.
But
Okay,
maybe he'll do better than T-Shroom.
I've saved the chart. I just need to crop it so that
Yep. No, take your
T-Shroom
time. Take your time.
can't peek here, huh?
But yeah, so it's really, really exciting tomorrow, the CPI print. I for some reason thought we were going to go live midday, but there's no Jerome Powell tomorrow. It's just the print. But
Yeah.
we're definitely going live November 2nd to cover Jerome Powell when he goes live and answers all the fun questions. But
That'll be lots of fun. All right, Caleb, are you ready?
I have it. All right, here we go. I'm going to share it.
Great.
Double or
All
nothing.
right, T-Shroom, I'm going to put you on the clock. All right, you have 30 seconds.
ooh, 30 seconds.
Yep.
This is daily candles going back to the beginning of 2021.
Ooh,
Oh, wow.
okay. So you have a lot more information here.
Okay, I'm gonna guess. It looks like it could be bonds, not yields, but the bond values, or something that's just tanked recently, and then come back
4
up.
seconds.
Oh no, this is oil.
Yeah, he's got
Hey,
it.
with 1 second to spare, congratulations,
I was thrown off
T-Shroom.
because the title of that PNG was ended in TURY, so I thought it might have been Treasury, but anyway. That was
Oh
awesome.
my
That
gosh.
was good.
Well,
Double or nothing. Oh,
so you won. Woo! Let's go, T-Shroom.
Yeah.
Oh my gosh.
I recognize it anywhere because it just broke. Well, actually, that's not. Is that a live chart? Because I thought that oil broke back down through that support and didn't confirm its resistance. But anyway,
That's what I'm looking at for crude oil futures right now. So I just took that screenshot now.
Okay.
T-Shroom, you're a bit of an oil fiend. I wouldn't expect any less from you from this.
Yeah.
So, all right, well, let's go ahead and get in some chats. We do not have any super chats, so you guys need to pick it up here. Pick it up, get some super chats in. But T-Shroom, you seeing any special chats that you want to read?
I have not been able to look really at the chats much, but
Well,
yeah.
let's read some positive chats, some reinforcements for our emotional support. We have Eric Brubaker says these games are great, good job. Queen says I'm having a great time, fire emoji. So congratulations to T-Shroom for winning, and congratulations to you guys as well for participating. I want to know who. I want to go back and look through the chat and see who did the best. I want to see who guessed them the best.
There was a great compliment from Eric Brubaker. He said, "At T-Shroom is brilliant. Franzen is Einstein, and I'm just a maintenance man. But I look forward to eventually understanding what they are saying." And
wasn't Einstein also a maintenance man? Well, he's a janitor. But.
he maintained his theory on atoms and
Well, he was a janitor
subatomic
before he got
phenomena.
into it. Okay, what I'm trying to do, T-Shroom,
Before he got into it.
T-Shroom, I'm trying to be inspirational. I'm trying
All right,
to
go
show
ahead.
him that Einstein went from a janitor in a school to being
Yeah.
one of the smartest people alive.
Yeah.
So you can do it too.
But
don't be down on
No,
yourself.
that's good. My message is this is why I try to, and I use the word dumb it down. That I hopefully you're not offended by that, but this is why I try to make things as simple as possible because Caleb and I, especially today, we've covered some pretty niche but very important stuff. So we try to make that palatable, make that digestible for folks, and so that you can kind of have a chance at understanding kind of the implications on that. So.
All right.
And at the end of the day, we're trying to come on here and share exactly what we're looking at. And like you said, explain it as much as we can in plain English. Unfortunately, we're dealing with a very, very nuanced topics and outlooks and a very dynamic system. So, it is a little bit difficult, but I think my outlook on this has always been, if people are paying attention, and they're listening, and, they don't even need to be taking notes or anything, but over time, they're going to, just grow exponentially in their knowledge of these different topics.
Absolutely.
So if people are here watching, listening, you're on the absolutely best trajectory. So
yeah,
osmosis, you're just absorbing it all.
And personally, I've learned so much about bonds this year. A lot of it has been, I've been forced to learn about it because it's so important now. But bonds used to be this thing that I thought just ran inverse to stocks. And, obviously we've learned, that's not always the case, and there's a lot more dynamics to it, but that, smart money invests in it, and it can be predictive of where the rest of the market's going to go, that the dumb money, so to speak.
So, teacher, I have a chat here from yesterday that we never got to. It's not a super chat; it's a regular chat. But I want to get your thoughts on this because I know you're pretty into the news. You're always scouring Twitter like a little Twitter scoundrel,
right?
So like a little Elon Musk acolyte, But I'm gonna go ahead and read this chat, and I want to get your thoughts on this. It was sent by Elliot Locke. Said, with recent attack on the Crimean Bridge escalating the war, barring an actual nuke and the OPEC news, how far down could we go in the market?
Could the market be affected by what specifically was the trigger point? A nuke?
No, by pretty much the escalating of the war on Ukraine.
Yeah.
There was like a bridge that got blown up, and I guess it was like a very important
I
bridge.
Definitely saw that, and it's unclear who did that. Because
somebody with an explosive.
There's a lot of those over there right now. But its effect on the market, I believe, is, the marginal escalation is going to be bearish for the market overall, right? Especially, European stocks like Volkswagen, right? And Adidas, because it doesn't bode well. But for commodity prices, it could potentially bode well. But it's just difficult to say because these like incremental escalations in a war that's ongoing, a lot of those don't directly translate into the market. And if it was just a calm waters market other than the conflict there, then you'd be seeing a lot of more market movement based on a bridge explosion, right? But right now you have the Bank of England warning their pension funds that they need to buy bonds within a certain amount or sell their bonds within a certain amount of time. Like, that's unprecedented. And then the next day flipping and telling their bankers, and somehow that got leaked, telling their bankers that they're going to extend into the future. So there's a bunch of crazy stuff going on. Nobody's buying Japanese bonds anymore. So there's a bunch of crazy, and that ultimately is shouting way louder than the war, which is kind of hard to believe, but that's just the reality of it. So I don't think that those events are getting priced into the market right now, but you will see them get priced into certain assets in Europe. But the NASDAQ is right now, it's obviously anticipating the CPI print way more than anything else. So it's going to be, I'd be surprised if it moves in one direction very much today. It's probably, theoretically it should be dancing around flat and then tomorrow go up or down quite a bit.
Well, Tishram, I have to say, people have been really eating this show up. So congratulations. Good. Shout out to you. You and Caleb, you guys are really powerhouses when you put your minds together. But what I would like to do here is I want to ask both of you guys, what is because we're not really getting too many chats. So I'm going to go ahead and insert my own chat real quick. What are you guys trading right now? What is the things that you're specifically away from your content creation side of things, right? Away from what you're posting on Twitter, your newsletters, and same thing for you, T-shirt, and what you're researching for here. What are your secret guilty pleasure stocks that you're over here or coins trading?
Sure.
When you're in the comfy warmth of your own home. T-shirt,
go ahead,
go first.
Yeah, I'll go first. So it's pretty simple right now. The only thing I'm freshly in. So I said that I mentioned I bought some SQQQ on the news yesterday, and then I sold it for a profit. That was nice. But then I made a kind of a mistake. I'm somewhat regretting it now based on the price movement. But I bought back into SQQ, and that has gone. For me, it's gone down. So I'm at here. Don't go to my screen, Smay, but I'm currently at a 1.5% loss on that, so not bad. Why am I holding on to that? and not selling it for a small loss. I'm holding on to it because tomorrow it kind of makes sense to keep a hedge against the market today, because I have so many long positions, long the market, the American equities market and crypto, that I might as well just hold on to this hedge. Because if a lot of my assets tank tomorrow based on the print, then my SQQQ, which is a reverse of the market, will do well, and I'll be able to recoup some of those losses. Go ahead, Caleb.
No, so I think that's a great point. I mentioned it earlier. Let me say this. I think it's important to kind of bifurcate trading and investing right now in this market. I certainly have a trading account right now where, again, I'm long FNGD, which is a triple inverse leveraged FANG index ETF. And I'm also long TARK, which is a 2x leveraged ARK ETF. So I kind of have this full-on hedge strategy going at the moment. Aside from that, though, I think this has been a beautiful market for people to be long-term investors. And one of the things that I've been very communicative about, both on Twitter and especially on Substack, is that the market environment right now is really optimal for this strategy, which is you want to de-risk as the market is accelerating high. Look, we're in a bear market. This is no secret by now. The Fed is not reversing course anytime soon per se. It's certainly possible, but that's definitely not my outlook. And so in a monetary tightening environment where liquidity is being pulled out of the system and rates have tailwinds to rise, there's going to be headwinds for asset prices, regardless of whether we're looking at stocks, bonds, real estate, or crypto. And so from my perspective, I've wanted to raise cash all year. And I started that process in December, thankfully, which was mostly for tax purposes at the time. But either way, the strategy that I've been advocating for all year is to de-risk, so to reduce short-term risk by moving into cash during market accelerations, and immediately begin increasing long-term portfolio exposure and long-term risk. And so the way that I've been advocating for that, obviously it's no secret, I'm a massive bull for Bitcoin over the long term. So I've been bidding, basically around this $18,000 to $21,000 range a lot. And I'm not really tripping about if we fall to 13K. Most of my purchases have been about 0.5% of available capital. So I could basically buy 200 times before going through all my capital. And so, I have a very long DCA window at the present moment. And on Substack, I launched a new series about a month and a half ago, maybe 5-6 weeks ago, where I'm actually sharing the 15 individual stocks and ETFs that I've been buying in my personal account and in accounts that I help to manage for family and friends and different people who are kind of in my circle. And so that is exclusive for premium members, but essentially in each report, I'm diving deep into the qualitative and quantitative investment thesis behind 2 of those 15 positions, and really kind of diving into financials, what the qualitative investment thesis is. And so if people are interested in that, definitely come check out, like I said, on Substack, cubicanalytics.substack.com.
So that was great, Caleb. And I'm going to have a moment with the audience real quick. Look at me in my eyes. If you just heard what he just said, talking about his newsletter, and you thought, I'll pass. Think again. You need to go sign up for that newsletter right now after the show's done, which we only have 3 minutes left in the show, so it's not too much longer. So you go sign up for that. It's going to change your life.
You have nothing to lose. Well, we have one more topic that I was hoping we would get to, and that is, Caleb, I don't know if you saw this PayPal headline, but basically, it leaked that PayPal had put into their terms of service that they would be able to fine you if you were saying the wrong things. And what I will say is that they only meant that for anything that you say on their platform, which is not a social media platform, so I'm not really sure how that works. But the fact that they would even care about what any of their clients or customers are saying is very strange. So I wanted to get your take on that.
Well, I think this highlights, I was aware of that. I did pay attention to it. I always want to give people and entities the benefit of the doubt. So,
good.
I wasn't even aware of the fact that, like you just mentioned, that this is specifically for what's said on their platform,
right?
Which I guess, like if I'm paying someone, $20 on Venmo and I use a derogatory term, maybe that's what they find me. Like, I don't understand. I mean, I don't use their platform in the first place, but I think just generally speaking, this highlights a couple of things. First and foremost is, the value proposition of Bitcoin as a censorship resistant monetary network, right? This is true decentralization. And I mean that in the fullest sense. And so when you have a centralized organization that can shut down the monetary network for a specific individual based on what they say or what they do or how they're spending their money, that's a concern for a lot of people, and it's becoming an increasing concern for a lot of people. So again, this does highlight the importance and the significance of Bitcoin in this environment. And so, that really just continues to reaffirm my optimism in Bitcoin specifically, and to be able to see the reaction from a lot of people. And albeit a lot of that reaction was from people within the crypto and Bitcoin community specifically, but the fact that it gets talked about, I had my mom reach out to me about this, what's going on, people are reaching out to me, and it's like, great, people are coming to the realization that this is an ongoing increasing trend, is that we're moving further and further towards censorship with respect to money. And so, again, it just highlights the importance of Bitcoin in this environment.
Yeah. It also, unfortunately, kind of heightens the probability, which, we can assume is well below 10 to 5%, but it heightens that possibility that the government could take, an outsized regulatory action against Bitcoin because it is so free speech, because it is so freedom first. So, we haven't seen any indication of that yet. In fact, we've seen the opposite as, the federal government is looking into regulating it equitably, not banning it, as New York has done something similar, although it's not perfect regulation. And then Europe, the EU, which, obviously they don't regulate the United States, but, they've just passed or they've ended the drafting of MiCA, which looks like it's going to be passed. And all of that, is the opposite of banning. When you regulate something, that means it's good or it's something that's productive that the citizenry is wanting and is willing to engage in. And therefore it does need to be, regulated to some extent. In the world we live in, that's just the reality. So, Caleb, I do want to thank you so much for coming along and joining us for this journey. I thought that game was really fun that Smay made, and I'm glad that you offered the double or nothing opportunity for me to take the dub there. But I think we're all winners today. That's kind of the way that I think about it.
I love it. Great show, you guys. You did awesome, Taylor, and same to you, Smay. I always love coming on. Thank you guys for giving me the platform to come on and share some of my message. So I really appreciate it, and look forward to seeing you guys every week.
Yes, sir.
Absolutely. Well, what I'll say before we close is what I said in the end of the market pulse, that is to share this video, folks. We definitely had a lot of golden nuggets in here, and what I want you to do is share it with one more person than you usually do. That's assuming that you obviously giving you the benefit of the doubt that you share it with at least one person every day. And that's what keeps this train rolling, and that's what keeps all this awesome information coming your way. Speaking of awesome information, Tim's going to be back on the show tomorrow and resume our normal programming, and it is going to be great to have him back, and we're going to be diving into that CPI print and what that implication, what that could imply for your pocketbook. Wow, who says pocketbook anymore? What it could imply for your wallet and your holdings. And we're going to have a good old time with that. And of course, Smay will have another game ready for us, and we'll be diving into that.
I think just a teaser. I think what I'm going to do is I'm going to bring, for Tim to experience the game we experienced today, I'm probably going to bring back Name That Chart, but with some cryptos. So that's probably what I'm going to do. So keep that in mind.
Yeah, I think that'll be really fun. Well, without further ado, thank you guys so much for watching, and we will see you in the next video. Peace.
Oh, I got a real good feeling.